The largest closed-end fund in the world is on sale now. The $17 billion Scottish Mortgage Investment Trust, ticker SMT, UK, dating back to 1909, is the flagship fund of noted United Kingdom growth stock manager Baillie Gifford. It sounds like a bond fund, but it has always had an equity orientation and has invested in new technology since its inception. It initially made convertible bond investments in rubber plantations in British Malaya as a play on the nascent auto industry. 100 years later, it was an early investor in Tesla, TSLA. Its mission: identify, own, and support the world's most exceptional growth companies. Scottish Mortgage has an impressive long-term record, returning 15% annually over the past 10 years, 3 percentage points better than the S&P 500. But it has suffered in the past 18 months with the sell-offs in Tesla, Amazon.com, AMZN, Moderna, mRNA, and other holdings. The fund's shares, now trading at a 23% discount to net asset value, look appealing as a play on a recovery in Baillie Gifford's investments, public and private, and a potential narrowing in the discount. The fund also carries a low annual fee of about 0.3% annually, way below the average of actively managed U.S. open and closed-end funds. The fee is also much lower than that of another big overseas closed-end, Bill Ackman's $10 billion Pershing Square Holdings, PSH, NA, which charges 1.5% annually and a 16% incentive fee on gains above its high watermark. Scottish Mortgage's top 5 holdings on April 30th were Moderna, Dutch semiconductor producer ASML Holding, ASML, Tesla, Latin America e-commerce play Mercado Libre, Meli, and Elon Musk's private SpaceX. Those 5 stocks represent about 30% of the fund's global portfolio, with U.S. investments accounting for about 60% of its total holdings. The main impediment for U.S. investors is that the fund is domiciled in the UK and the shares are traded in sterling on the London Stock Exchange, with a recent price of about 620 pence. The fund, technically an independent trust, is a member of the benchmark FTSE 100 index. For U.S. investors, it is taxed as a passive foreign investment company. The fund's share price was hit hard during the Nasdaq rout, declining 46% in 2022. The UK shares are down nearly 60% from their November 1, 2021, peak around 1,500 pence. The discount has widened from about 5% a year ago. U.S. investors can purchase the UK shares, or buy the lightly traded OTC Markets shares at around $8 a piece under the ticker STMZF. Why the big discount? A key issue is the value of the private portfolio, which makes up about 30% of the fund's holdings and includes SpaceX, battery maker Northvolt, Stripe, and TikTok parent ByteDance. The fund's 12% leverage magnifies returns. Edinburgh-based Baillie Gifford, which manages $289 billion, says on its website that it pursues a rigorous process for evaluating its private investments and that the average private investment was written down by 34% in calendar 2022, in line with the drop in the Nasdaq. Longtime manager James Anderson, a former member of the Barron's Roundtable, retired last year. The fund is now headed by Tom Slater, who acknowledged in his semi-annual shareholder letter, released this past week, that investment trust's recent performance has been painful for investors. But history shows that periods of poor performance are inevitable. Our approach will never be consistently in favor, and we should not deviate from it to avoid short-term headwinds. Ackman's Pershing Square trades at an even bigger 30% plus discount to its NAV. And Scottish Mortgage offers a low-fee play on a group of big-cap growth stocks and private investments that would be tough for individual investors to access.